Well, welcome back, everybody, to Be the Trader. Today, I have a very special guest. It's someone who brought me into this game because without him, I probably wouldn't be trading, which is pretty awesome. I'm excited to introduce you all, someone who probably doesn't need introduction, Timothy Sykes. Tim, welcome to the show, man.
Hey, thank you for having me.
Absolutely. And it's funny, I first off, I just want to know from your perspective, because you're always doing a lot of things. You're doing so many things. And one thing that comes to mind is discipline from my perspective, watching what you do. And I'm just curious on like what it's like to, in your current day, like a current day in Tim Sykes' world, and how do you manage that day? Like how do you keep up with everything?
Yeah, I mean, looking in from the outside, it seems crazy. For me, I mean, it's always just been about I have a strategy, I have patterns, I want to take advantage of those. Now I want to teach them. So no matter where I am in the world, it's always like, is there a good play or a hot sector? That's priority. And then everything else just goes from that. Like if I'm in Japan, I'm staying up all night trading US stocks. It's not the best, but it happens. If I'm in Europe, I love it. I can sleep till like noon. The US stock market opens at 3. So I'm out all night, I'm partying, I'm having fun. Then I work from like 3 to 10 when the US stock market is. So it's all based around New York hours. Sometimes I go out, sometimes I have fun, sometimes I'm just working nonstop. Like right now, I'm quarantined in California, so I'm getting up at 6 a.m. every morning, 5 a.m. sometimes. Just trading, teaching, business is blowing up. I've actually doubled my number of students so far in 2020 just because a lot of other people are blowing up and, safe mutual funds and a lot of strategies that people thought would be good are down 20, 30, 40%.
Yeah, speaking of that, you have a lot of people blowing up right now. Since you brought that up, I have Jack, Kyle, Roland, Tim Grattani, and Mark Crook, and all these people. The young ones who just started really blowing up are the ones I mentioned earlier, Kyle and Jack, and I think Dom and some other people. What do you feel like, since you brought that up? I'm curious on what do you feel like is you'll see students who get it, and then they might get it for a while and then fall. And then you see the students like Jack and the others who get it and they rise. So what is the difference that you notice on these two different type of people? Because they both get it at first and then some don't make it.
Yeah, great question. I mean, it's not an exact science, but what I found is that every one of my top students studies their butts off, like 5, 10, 15 hours a day, every day, learning different patterns, learning from the past. Some people do get it. Like the whole key is like the stock market is like a moving target, right? So like it's always moving and you have to be kind of moving with it. Like if you've ever seen Top Gun, where Tom Cruise is like trying to shoot the moving freaking like plane and you're trying to do it. So you have to move, but then the plane is moving. So you have to kind of try to get in tune with the stock market. And what people have done who have been consistently successful, like Tim Grattani made over $700,000 last month. He's closing in on $11 million in profits. He started with 1,500. He's managed to move with the market in many different ways. He was trading OTCs, trading promoted stocks. Promoters went out of business. He moved to NASDAQ stocks. He's trading when the sector is hot. Lately, even though the market's been crashing, coronavirus stocks, medical equipment stocks, hand sanitizer stocks are hot. So recognizing different patterns and really trying to participate in the ups and the downs. Like Grattani made 100,000 plus on INO on the way up and 100,000 plus on the way down. So he's getting better at going long and short. What I found is that there's always going to be opportunities. It's just a question, are you prepared? And the students who really consistently do well, like Jack Kellogg has moved from OTCs to a lot of NASDAQs. He's gone long, he's gone short. They've just gotten good at multiple patterns. Some people are only good at one pattern. And that's cool when that pattern is on, but if that pattern is off, then you got nothing. So I always tell students, like, focus, like try to find your one pattern or two good patterns, but try other patterns in the back. Like even successful companies that are making record profits, they always invest 10, 15, 20, 30% into R&D just in case. You don't want to be the company that has record profits and then you didn't invest in the future and then some other company overtakes you and you have no new products and then you go out of business. So you got to think like as a trader, you're experimenting, you're testing out different patterns, you're trying to calibrate, you're trying to modulate in like tune with the market. But then also, even if you're not good at a pattern, like at least still try different stuff just in case that pattern becomes the pattern.
Yeah, no, I think that's a good point. I didn't think about it that way. Like, companies are R&D and all the time to stay afloat, to stay ahead of the time, to stay with the market. And that's exactly what your guys are doing now, where they're always kind of adjusting and adapting. And you kind of answered the question, because I was going to say, we always want to focus on one or two patterns. So I do want to have a question around, people say the market's constantly changing, right? But then they also say the patterns, there's people here who say patterns don't change really, they're always the same. And there's people here who say you constantly got to adapt, because if you only have one pattern, it's not going to work, right? Where is it somewhere in the middle, or is there always a pattern that always works? Can you kind of explain, because you've been in the game for a long time?
Yeah, I mean, sometimes there's no pattern, and like I get time off, and I've frankly been rooting for a market crash because I wanted time off because I was already overwhelmed. But we've got the market crash, but now coronavirus stocks are hotter than any sector have been in the past like 2 or 3 years. It's hotter than weed stocks or crypto stocks. So I think, it's not an exact science. Like you don't know like which pattern is going to be in play. Again, all you can do is kind of arm yourself for battle. If you look at this, I'll make another analogy. I make analogies, right? Like if you look at this like a battlefield, and you have different weapons, you want as many weapons as possible because you don't know what is going to work best against the enemy. If you only have one weapon, like let's say you're only good at dip buying morning panics, okay, you wait for the morning panics. But what if there's no morning panics and you get a whole bunch of first green day stocks and that's what's moving, but you're only good at morning panics? So now you're missing all those opportunities. But in ideal sense, you learn from the past. I mean, I have more than enough video lessons, DVDs, webinars. Gritani has 50 plus webinars for challenge students. Hardly anybody watches them. We have so much content, but people just want hot picks, and too many of them just want to focus on whatever pattern or sector is working right now. They don't want to invest in R&D. They don't want to think about the future. They just want money right now. And a lot of newbies get encouraged when they make like $1,000 or $2,000 in a month. And so like, yeah, I'm on the right track, but they don't think about the potential upside. They don't think about what to do like 2 months, 6 months from now. So I always try to tell people this is a marathon, not a sprint. How do you put yourself in the best position to make the most money 3, 4, 5, 10 years from now? And that means learning different patterns, knowing different strategies, at least trying it. I mean, you can paper trade now with stocks to trade. You can buy 100 shares, even if you want to use real money, but always be tinkering. And that way, I mean, after 20 plus years, I probably have, I don't know, maybe a dozen patterns that I'm like really competent at. And so whenever that pattern gets hot, I recognize it. And sometimes I'm rusty, like CYDY is a promoted like stock. I don't know if it is being promoted, but it moves like a promoted stock. It had a perfect midday panic the other day, not a morning panic like I like, but a midday panic from 3-ish down to 2-ish. And I was too early because I haven't seen a perfect panic in a while, and I was kind of rusty, but I nailed the bottom at 2, and I ended up making like $4,000 on the day. I think Jack Kellogg made like $6,000. Both of us were like unhappy. We're like, we missed out on so much more. Gritani nailed the short on that. He made like 40 or 50 grand. So you can be rusty if a pattern hasn't shown itself in a while, but the longer you're in this game, you get more and more examples, and you have to try to remember from past examples. And even if you're rusty, you just try the best you can. And even if you miss a play, even if you like don't get executed, even if you screw up and you lose money, at least add that to your kind of knowledge database. So, over the years, I've probably done, I don't know, maybe maybe like 2,000 morning dip buys. So every future dip buy is influenced by that catalog in my head. I have 800 video lessons on morning panic dip buys. Some people ask, like, how do you know where the bottom is? I was like, well, every play is a little different, but you have this massive database, which you should study. And then, you can kind of see it. It always helps to see it in real time because these stocks move faster than you think.
Yeah, no, absolutely. It's crazy, man. It's a lot. Some people may know this, but you might not know. And that is, my journey started with you, right? And it started with, I did your challenge. And, it's funny. I'm going to be honest with you. When I first went through the challenge, I personally, at first, was like, I was like only in the wrong mindset of I want to make money, right? I was in the wrong mindset and I was just trying to make money real quick. And then I studied literally, I watched all your DVDs, watched all your video lessons. I was addicted and I'm like a very addicted personality, right? And
Yeah.
so I did that. And then at first I was getting frustrated and I was blaming you instead of blaming myself.
Yeah.
And then I started to, I started to explore, try new things. And then I started to discover everything you did teach started to work. And it's like when I started to change how I saw the market, then I could actually take your lessons rather than how I was going at it where I need to make money, right? It was so
100%.
weird.
And
So
I'm
I
glad you
do
brought that
appreciate you
up.
saying, I appreciate you making all those videos because I did watch all of those. And I was addicted to Tim Grittani too. So I watched all of his like over and over. And I was just like, man, this is actually really good stuff. Because now that I'm profitable, I see everything, all those video lessons are now coming to fruition where I'm like, oh, I remember this. Oh, now I can recognize this. So it's a
It's
good
like,
point, man.
I mean, I compare it to the Matrix where, like you're trying, like, remember Neo tries to jump, but everyone falls on their first jump and he's
Yeah.
trying to fight the people, but he can't fight them. And then at the end, he sees all the code and he's like fighting him and he's like fighting him with one hand and it's so easy. And, this isn't code, this isn't an exact science, but like the way that I teach, people really respond to it at first, but again, newbies need money right away. Otherwise, their family, their friends all say that it's a scam and they get discouraged. But then usually they come back like 6 months, a year, 2 years, 3 years later. And right now I'm getting all these messages being like, oh my God, like now it makes sense to me. So I just have to try to get people to that aha moment sooner. And it's tough because these lessons are counterintuitive. You got to wait for the right setups. You got to wait for the hot sectors. And it's like people need money. Like you're studying 10, 15, 50 hours and you're not making any money. You're like, why am I doing this? It's tough, but that's trading. And that's why I say this is a marathon, not a sprint, because if you can picture, okay, I'm not going to make any money. Like Grittani made no money his first 9 months. He didn't even trade his first 3 months. And now in year 8 or 9, he's up, 11 million. Like, what can you do? And again, this is like, I think you have to kind of have like the college mentality. I don't think you need to spend 20, 30, 40, 50, 100, 200 grand on college, but I do like the 4-year requirement to graduate college. And, I teach some pretty dumb people. It's never taken 4 years for anyone to get it. It's usually like 1 or 2 or 3 years. Like Huddy really started clicking like year 2, year 3. Jack Kellogg was like year 1 and a half. Roland was more year 1 because he was doing 17 hours a day. So it depends on how many hours you put in, but then also what kind of market you put in. You can't control the market. Sometimes you're there, you're studying, and there's just no plays, and you're like, this sucks. But right now, there's tons of plays, and so many people are unprepared, and that sucks too. So you have to try to maximize your preparation and be ready when there are plays.
Yeah, no, absolutely. I think you mentioned something just a while ago in the previous answer was, at one point you were a morning dip buy, the next point, maybe one day everything's spiking and you're only a morning dip buy, so nothing's spiking, so you're missing out. It made me remember, and this could have changed, so you let me know, but a long time ago when I was following you and it was part of the challenge, I would remember you saying that you were a short bias back then, and now you're mainly long bias. If that's still the case, my question was going to be, what is the biggest difference that you had to overcome from, because I'm a short bias all the way. So for coming from a short to a long, like were there some unique changes you had to do with your mindset of like either taking profits or being more flexible, whatever it may be? Because I personally struggle with long, so I'm just curious.
Yeah, no, I mean, it's the dark side versus the force. And you went to the dark side, and, I know that there's more power with the dark side, even though ultimately you'll lose. No, you get to choose. For me, I gravitated away from short selling because the pump and dumps have decreased. Like I was so confident short selling because I was shorting pump and dumps. And like, I don't care if I get squeezed for a little bit, I can add to the position because I know it's going to end because they're pump and dumps. Now the best shorts are these coronavirus spikers. And frankly, you don't know how high they're going to go. And there have been so many short squeezes. And not just from a personal trading standpoint, but from a teaching standpoint, newbies, like can't get their heads wrapped around short squeezes. Newbies aren't ready for how high a short squeeze can go. You have to really use specialized brokers to find shares to short. It's really tough unless like you're experienced, like you gravitated towards short selling, but at least you had a foundation of studying different long setups and short setups,
Yep.
and you have experience. But people, again, going back to the beginning of your journey where you just want to make money, people who just want to make money, they're not necessarily going to display the right tendencies with trading. So I need to think about that, and I need to be prepared. Wait a minute, these people are not going to do the proper trades. They're not going to follow the rules. Let me put them in low risk trades rather than have them in high risk trades, which is what short selling is. Even though a lot of my top students have made millions short selling, I made millions short selling. From a teaching perspective, I just need to get people learning low risk setups first, then they can go into higher risk setups later on after they have experience. So I'm like 95% long. But if a whole bunch of pump and dumps come through, I have no problem shorting them. The SEC actually suspended a whole bunch of little wannabe coronavirus plays, like NBDR. It was like at 2 cents or 3 cents. I actually bought it a few times. And the SEC said like there's questions surrounding their legitimacy. SOLI is another one that got suspended. So I was actually buying these. I didn't know, I just expect the worst out of every company, so I'm never disappointed. But the best, I guess you could say, like potential pumps were so low price they weren't even worth shorting. So there are pumps, but for me, I buy pumps too. And fortunately, I didn't get caught in any of the halts, but that's what happens when you risk going long overnight. So there's risk shorting, there's risk going long. You're just trying to take the best low risk trades for newbies and for myself.
Do you feel like there's a difference though between, since you do both, and you've done both, like you were strictly short for a while and now long, and do you feel like there's a difference between the mentality you need to have as a short bias versus a long bias trader in terms of
100%. I mean, shorting is tough. Like, you need the whole mentality, like, okay, they're probably going to have like warrants. They're probably going to have a financing. Something will crash the stock. The momentum will fade. That'll crash the stock. It'll trade under the VWAP. So you're waiting for kind of like you're kind of, I mean, from a virus standpoint, you're waiting for the curve to flatten and then decrease. And as we've seen, I think you could make the analogy with, Spain and Italy has flattened the curve with the coronavirus, but they're still getting 500, 600 deaths a day. So even though at their peak there were 700, 800 deaths per day. So yeah, there's less deaths per day, but it hasn't decreased. And I think the same is similar with shorting, where you're waiting for that curve to turn upside down. And when it does turn, it can go very fast, whether the SEC suspends the stock or, if the stock crashes through the VWAP, and, all the stop losses get taken out. But for me, I like the fast upside potential with, morning spikers. Like we've been seeing these stocks go from like 2 to like 5 or even 10 in a morning. Huge upside potential, like 2, 3, 4, 5 times your money. Shorting, you can never make 5 times your money because you're betting against it, even though there's higher odds. So you have to look at the odds. You have to look at the length of time, and you really just have to understand like what pushes stocks up and what pushes stocks down. And they're two totally different things. A stock can usually go up much quicker than it comes down, especially when there's so many short sellers these days. I think the space is very crowded, which makes it extra risky for newbies.
That's a good point. So I'm just curious, like if there's one, because people listening, I have a lot of listeners who are beginners, right? And so I'm curious because they always ask me like, why don't you ask them questions about a strategy? So I'm just curious, just for them, is if you can give one idea or one tip to anyone out here who's listening, who's a beginner, because everyone's like, you got to focus on one. Which one pattern would you suggest?
I mean, morning panic dip buys, I think is fantastic. Whether it's a $2 or $3 stock like CYDY, where, it dropped to 2 intraday and then bounced to 270. So you're making 30% on your money, in like an hour or two. KBLB, even that one, on Friday, literally yesterday, panicked from like 26 to like 19, or maybe it was like 25 to like 15, and then bounced to 21. So again, 30% on your money inside of an hour. And both of them were multi-day, multi-week setups where, they've been spiking, and you don't necessarily want to chase them on the long side, but you know that other people are chasing and some people are just waiting. So when you get that crash, it's kind of like a flash sale. It's kind of like Black Friday. You're like, hey, 30% off. And then, if it doesn't bounce, you just get out. So you're either going to make 5, 10, 15, 20% really quick, or lose like 1 or 2%, or maybe break even. That's good risk reward, and it happens within an hour, and you can prepare ahead of time. You just have to be ready near the market open usually.
So something that struck me when you were talking just now was, cutting your loss when you're wrong. And it reminded me of what you embedded in me, and that is cut your losses quickly. And just your whole philosophies of be like a sniper, wait, like be a retired trader, don't trade until you forced to trade, and making sure you only stick to what you're good at. And all of that really has helped me personally now, like now that I'm doing well and I'm able to just like remind myself of all of those. But like what's unique is the one challenge for me, I'm sure many people may feel the same, is the interpretation of cutting your losses quickly. Right. Yeah. And for me, I know what works for me now, so I'm fine. But I'm curious on when I first started, I used to think cutting losses quickly, I took it the wrong way. It might not be the wrong way, but for me it was at the time. And that was just as soon as I feel like I'm wrong, I just cut it. And the way I wrote down a couple of ideas of how I used to think, and that was either as soon as you feel you're wrong, cut it. When your risk is hit, which is how I do it now, I love that way, is when my risk is hit, I cut it. And then, where I'm technically wrong, and then cutting it when it doesn't go your way right away, which is something that me and Jack were talking about a while back, and that's how he likes to cut it. So I'm just curious on what you're hoping people get from that now that I can get you on here, and if you can explain a little bit more in depth what you mean by cut your losses quickly. Yeah. And then Roland also was the guy who just cut it right away. As soon as he was wrong, he just cut it.
It comes down to how experienced you are. And newbies, again, are not experienced. They're not used to how quick something can drop. They always expect the best when they should be thinking about preparing for the worst. So I like the idea of just cutting it. Like sometimes I exit a trade and I make like 2%, and then the thing spikes 20%. I like playing overly safe as a teacher, and especially in the beginning. And most of my students eventually get more aggressive, more patient. Grittani, has, even though he makes like $100,000 on some trades and $200,000 on some trades, he sometimes loses 30, 40, 50,000. And he's okay with that risk because he's made, over 10 million now. Newbies need to get in the habit of being more like snipers. Like, bigger traders and more experienced traders, you can even average up on your shorts. You can average down, you can exit. Like, I know Grittani, when he was shorting, ICD the other day, and he was exiting like 1/5 at a time. Most newbies, they're under the PDT rule. You can't make 5 trades on one trade. Like, you have to go in, you have to get out. So you have to understand where you are in your kind of arc as a student and as a trader. And in the beginning, just play overly safe because you're just not prepared for how fast this stuff moves or the risks. And the key is staying in the game and getting enough confidence and experience to really get more aggressive later on. Like, no different than if people say, what's the right position size? And I say, in the beginning, start very small. If you think that you can trade with 10,000, trade with like 2,000. Trade with 1/5 of what you think, because you're probably not going to make much or lose much in the beginning. So people want to make money the fastest, but like the most money that you should be concerned about is what are you going to do in 2 or 3 years? And if you blow up now, if you risk too much, if you don't cut losses quickly, if you just lose everything or lose too much and it kills your confidence, you're not going to be around in 2 or 3 years to find out what you can do. So for me, it's just getting people to stay in the game, trade extra safe at first, and then work your safety levels back. You can get more aggressive later on. And I think that's a good way to be as a student, especially when you're first beginning.
Yeah, absolutely. And what is probably, because you get millions of fucking people messaging you. So what is probably the most unqualified in terms of, I would say, how do I word this? A question that they think is super important. A question that they feel like is super important that will change everything, that really is just their ignorance shows that it's not the right question. You know what I'm saying?
I mean, I get every hour of the day, I get another dumb question. Right before this, I responded to someone on YouTube who's like, oldest trick in the books. You just send a buy alert to one half of your email list and a short alert to the other half. And that way, like always 50% are going to be right. And I'm like, you realize I just trade the patterns that I teach. I don't have two accounts. I don't take the opposite. But I get it. Like there are so many scams. So they're thinking conspiracy theory. This seems too good to be true. I see people where they're like, oh, Grittani's made 11 million. He just goes all in and uses leverage. I'm like, no, actually he doesn't use leverage at all. I think the key is getting people to understand that it's a process. And if I can get them on the path of making 200, 500, 1,000 in a day on a low risk trade that they can take a bigger position on later on. And then also don't confuse small gains adding up. Like if you just scalp Amazon puts and you make $50, oh, small gains added up. But that's not a scalable strategy, right? Like for me, it's how do you make a small amount where you have a small position. And then again, 2-3 years later on, when you have more experience, you have more confidence in a bigger account, you take the same exact trade. Maybe you have a bigger position. Instead of buying 500 shares, you buy 5,000. And instead of cutting losses really quickly, you set a risk target and then you give it more time, which gives it, more time to go up or down, whatever you want. But the key is just learning how to play it extra safe and then getting more aggressive later on. That's the number one thing. There's so many other conspiracy theories and betting big at first and people who make too much too quickly. That's another problem because they're like, Sykes, you play things too safely. I just made 10,000. And then 6 months later, I get an email. They're like, you were right. I blew up. And I don't want that, and then they get all introspective on Twitter. A lot of short sellers are like, this company is trash. They have warrants, they have a toxic financing coming, and yet the stock still squeezes. This happened the other day. I forget which stock it was. AKER, and they were shorting it in the 3s and the 4s, saying this company needs cash. It was already up from the 1s and the 2s, and they were right that a financing was going to come, except it squeezed to the 7s before the financing came, and then even after the financings is down to the 5s. So their whole philosophy that this company is trash and needs money, yes, fundamentally they're right, but they underestimated the size and upside potential of a short squeeze. So I don't think you can be too cocky on longs or shorts, even if you're fundamentally right about the company.
What would be the one thing you're personally working on right now in your own trading? Like what would you be focused on? Is there anything you're focused on to get better?
No, I don't matter. I'm irrelevant. There's a lot of things I could do to be a better trader. I mean, if I just stopped teaching, I would be a better trader. I spend most of my life trying to figure out how do I get the best lessons? How do I reduce the risk for newbies? How do I take trades where I can make a good video lesson and showcase it? For me, it's not just about the money that I make. So everyone else has it much easier. Like I'm trying to choose good trades that people can watch and learn from. If there's a stock where I buy it and it's morning spiking and it's spiking too fast, even by the time I buy it and send out the alert, it's already up $2 a share. And then, people are like, oh, you just pumped it. And I'm like, no, I'm trying to showcase good lessons. So for me, I'm fucked. I'm screwed. Sorry, I didn't mean to swear.
No, you're fine. You're fine. This is not that kind of shit.
But it's not the end of the world. I trade with a small account. I donate all my money to charity. For me, it's about how do I become the best teacher. So if I make $200 on a trade, but I can make a freaking good 15-minute video lesson on that trade, that's fantastic. It costs me more than the money I make on the trade just to send a freaking email to all the students with the email and text messaging fees. So I have a different set of priorities than everybody else.
So speaking of that though, and this is the last question I ask, and then I want you to share with I'm sure everyone already knows how to find you, but just in case you can tell people where to find you. And my question is, because you just brought it up, when I asked that first question, you said, well, I'm more focused on teaching. So as a teacher, what have you found to be the best way to approach teaching?
I'm trying to get degenerate gamblers to trade responsibly. So it's pretty much the toughest thing. I'm trying to clean up junkies. So I think the best thing that I found is to treat this like Alcoholics Anonymous, like AA meetings. And I'm trying to get people to realize that they have a problem. Some people aren't degenerates, but we all kind of have that deep down inside. So I have to, even if someone doesn't realize they're a degenerate, I have to help them see the potential risk if they let the beast out of its cage. So for me, it's just teaching structured patterns, boring risk management, trading small in the beginning, and getting excited for what happens 2, 3, 4, 5 years into the journey. So it's a lot of it is just mindset. Like you said, like, you studied everything, but you had the wrong mindset. So all my lessons fell on deaf ears because you're like, oh, I got to make money. I got to do all this. So you might have been studying, but you weren't getting the huge value out of the lessons because you weren't in the right mindset. So I need to get newbies in the right mindset so they can get the most value out of the teachings. And that's a daily struggle, like telling people, on one hand, just getting students excited to study, being like, hey, Grittani made 30 grand today, but no, that's not for you. That's years later. So it's a balancing act,
Yeah.
I need to get them to study, but I need to get them study and thinking the right way. And I don't have the perfect solution, but I definitely have gotten better every year at structuring this and seeing what works best for students. And, as more and more students become good examples, like Jack Kellogg made over 70 grand last month.
Yep.
He still doesn't even know what the fuck like a Knight of the Roxbury is. He's too young for that movie. Chain on the outside of his shirt, and he's making 70 grand in a month, staying humble. Like whenever my top students message me, before I would be like, congratulations, that's so amazing. Now it's become like, okay, stay humble, don't get cocky, don't blow up. So it's changed a little bit because now I've been teaching for over a decade. I have so many more testimonials and I see what works, and I'm using what works to create more successful students faster.
Awesome, man. Well, look, I appreciate you being here today. And I'd love for you to tell people, if they don't know where to find you, can you tell them right now what's the best way to reach out to you?
Yeah, type in, is Timothy Sykes a scam on Google and see what happens. It's always entertaining. No, 100%. Like there's like a whole battle. Like, is this real? Is this not? And I'm just like, I have so many students, so many video lessons, so much data. If you don't think that this is real, like you do me a favor if you're unsure or if you're like, this is a scam, because you're just too dumb to even be a student. You're probably just going to waste my time. You're going to have the wrong mindset. So for me, yes, I want more students, but I want quality students. So you really have to be ready to grind. You have to be ready to feel like crap for maybe 6 months or even a year, mentally and physically, from studying so much. But again, are you in the right spot where you want to do well 2, 3, 4 years from now, and you're willing to put in the work and the upfront time commitment and money commitment to actually learn this stuff, because it does pay off in good markets or bad markets. Just type in Timothy Sykes and see what happens, and enjoy the carnival that is my life.
Perfect. Well, Tim, look, man, I really appreciate you being here today. It's a pleasure to talk with you, and just thank you, man. Thank you for everything you put out there, man.
No, my pleasure, and thank you for the good questions. This has been a really good interview, and it's important not just to say, oh, it's about hot picks or hot alerts or patterns or getting rich. You have to look at the nuances. You have to look at these little subtleties, like you said, where you're like, I'm studying, but I didn't have the right mindset. Like, people are like, what does that mean? Like, I thought it was just about studying. You have to study the right way. You have to train the right way. You have to think the right way. And again, even when you do all that, you're still not guaranteed to succeed, but you have better odds of success than the 90% of traders who lose. So interviews like this, counterintuitive thinking, deep questions that don't have perfect answers, that's what's needed to be successful over time. So thank you for asking that, and thank you for sharing your point of view too.
For sure. Well, thanks again, man. You take care.